Let's first put all this into perspective with Feroze Azeez, the joint CEO of Anand Rathi, who joins me this morning. But Feroze, thank you so much for being here. Before I really come into the mood of the day on the Lal Street, I want to understand from you the mood in your office after a fantastic listing of Anand Rathi yesterday.
Good morning, Kartik. Yes, God has been kind. The listing was very good. The response during the IPO subscriptions were also great, upwards of 20 times subscription. With every listing of a group company, bigger becomes your responsibility because you're carrying a brand. You're making sure that there are more people involved and there are shareholders. So I think it's a larger responsibility. Of course, we partied, but we have this tendency of not celebrating eternally and getting to work. And that's when the celebrations last. So back to hard grind from today on.
Right, so let's get back to work. And it seems like the work is fairly mundane because the markets seem absolutely unexcited, unfazed and unexcited. It's absolute flattish tone on the markets this morning. Is this in anticipation of RBI's rate decision to be announced in just about half an hour, 40 minutes from now?
Yes, Karthik, the volatility generally before an event dips dramatically. You can measure volatility on a daily standard deviation or a 10-minute standard deviation. I had done some hypotheses to check before all major events for the previous 2, 3, 4 hours. The 10-minute volatility drops dramatically, and I think that's what is happening. And once the event comes in, then there is some degree of expression of people's moods comes into the market, and hence there's a spike in the volatility. But through the day, it gets normalized. So you're absolutely right. This lull is emerging. Yesterday's expiry was also quite a mundane expiry for Nifty. I think that's in anticipation because people are indecisive, especially the short-term traders, and would want to watch this event and its conclusions
Right.
before they take a position.
All right, of course. So, and I think that in conclusion, coming on account of a lot of things which are expected to happen, not just the RBI policy, but overall, whatever else is happening in the world. At one level, there is war and peace and the pathways to peace being made. So God knows what's going to happen on that front. And of course, the unpredictability of US President Donald Trump continues to weigh on investors' decisions one way or another. But one stock that I want to specifically discuss with you this morning, Feroze, is Tata Motors and the split which is likely to come into effect today, the 1:1 split on Tata Motors commercial vehicles as well as passenger vehicles. Just explain to our viewers, those who are invested in Tata Motors, what it means for them and what their strategy should be at a time when a demerger is on the cards.
Karthik, I'm actually not qualified to comment on a specific stock.
Sure.
So I can only tell you about auto sector. Auto has been one of the sectors which has gone through a reasonable grind of downward movement over the last 1 year because their earnings, Nifty Auto earnings, degrew by about 2.7%, if I remember right, for FY25. So if you are owning any auto stock for that matter, I think they are at reasonable valuations. If you look at the mean and median PE of Nifty Auto, you would see that we are trading at lower than 1 sigma of the mean and median P of Nifty Auto. So coming back, I think Auto will have the capacity to beat Nifty by about 5% per annum over the next 2, 3 years. So that's what Auto has in store for you. Of course, a split does not have too much in any corporate for that matter. Split is not a very important corporate action because you don't even get the tax benefit of Section 94(8), unlike in a bonus where you can actually claim tax losses provided you hold it 3 months prior to the bonus record date or 9 months after. So it's a lower of a corporate event, so does not have the tendency to induce demand and supply as much. So I think you should, if you bought that business, you should stay on
Okay.
because the sector is going to get some tailwinds.
Okay, but historically, at least in the recent past, I think the two headline events of a demerger that come to mind happen to be Reliance, which flanked off JFS as a separate division, and then ITC that demerged the hotels business. So for the investors, once that split is through and they get an equivalent amount of shares or in whatever ratio the split happens, as far as investor wealth goes, is it prudent to stay invested in both the splitted stocks, or is it better to then pick and choose which one you derive more value from or you expect to derive more value from?
I think yes, absolutely. See, I think like I said, split of a share is not such an important corporate event, but demerger and a separate company being carved out is a very, very important corporate event. And when it comes to two different kind, like you said, Reliance and Reliance Jio getting demerged from Reliance Industries was one of the latest big ones, apart from the ITC. When that happens, I would say that the new stock which emerges requires a certain degree of stability to come in. So I think if you are a long-term investor, you should not hurry selling it. Now, for example, in India, the tendency to own a new share for a long periods of time doesn't exist. Let me
Right.
give you an example of our own companies, Anand Rathi Stock Broking Limited. The volume on the first day was upwards of 2 crore shares. But the number of shares which were actually issued in the primary round of IPO was lesser than 2 crore shares. So that implies whatever you put as a free float turned once in the one day. So to answer your question, Kartik, not just for this demerger, any demerger, if you're a long-term investor, the devil lies in the detail. Don't hurry up to sell something. If you didn't sell, if you're not going to sell the primary share which you had in the first place, don't be in a hurry to sell the second one. The demand and supply of the short-term traders dictates the price, which is not at all business dependent.
All right, and now let's move on, Feroze, to something which you have often said that you're bearish on, but all the signs say that there is a bull run as far as gold is concerned. Gold prices for our viewers have surged once again on Tuesday, climbing 5 rupees to reach a lifetime high of 1,20,000 rupees per 10 grams in the national capital. Now, some analysts attribute this rally to a weaker dollar and market expectations of further rate cuts by the US Fed. Investors, meanwhile, are turning jittery amid looming prospects of a US government shutdown likely to happen in just a few minutes from now. Now, in this current calendar year, gold prices have surged by 41,000 rupees from as low, one can call it now, to under 79,000 rupees at the end of 2024 to now as high as 1,20,000 rupees. Feroze, any change in your stance as far as the yellow metal goes, or do you still believe that it's one of the commodities that you're better off being bearish on?
No, Karthik, see, let me clarify. My stance is for a debt investor, he should put half his money, debt money, into gold. This
Okay,
has been my stance for years. And
right.
so I can be, for an Indian household who has 53% of their financial assets in fixed deposit or equivalent, I am the most bullish person on the street, because I'm saying half that money, which is 26% percent of the total household savings on the debt side, should go to gold. But when it comes to equity, equity will not be beaten by gold on a long-term basis. You take any pocket. That's on point one. Now coming to the contemporary situation, you're absolutely right that it has moved 41,000, and that's no small ask on a base of 75,000. If you move 41,000, that's a serious 40-50% gain in a period after a good rally last year. So, am I reading something? Yes, there's something cooking up in the global market. Is why the dollar gold has done beautifully well. The second thing, which I was yesterday checking, the MCX gold futures of
Yeah,
December,
yeah.
they show a little different picture. Of course, the volatility has shot up significantly more. The last 1 month standard deviation of MCX gold is 37%.
Okay,
And Nifty standard deviation is 12%. So there is something cooking up, point one.
yeah.
Point two, December futures just being at 0.5%. December futures on MCX Gold. Yesterday, one of my clients was insisting to buy 30 crores
Yeah,
of it,
yeah,
26 lots of it. So I just checked it as a matter of curiosity. Should you buy an ETF
right,
or buy an MCX where you don't have to put capital? You just have to pay a little extra premium to
right,
own it till December.
right.
The premium was just about 1,000 rupees, which is 0.6%.
So what does this tell
This
us, Feroze?
this tells us that the futures market is not as bullish from here on. That's what it tells us. Will it
So
go
what
right
is
or
the
wrong?
futures market, or what are the futures investors really expecting? Are they expecting some sort of stability as far as tariffs go, more money coming into equity, perhaps some changes in oil prices? What do you think could be some of the reasons that investors are not bullish in the futures market on gold?
See, the reason could be that you're on the fag end of the momentum rally, maybe, right?
Okay,
That could be one indication. Whenever a bubble, or no, this can't be called a bubble because we're speaking about hard asset.
right.
Whenever a momentum rally finishes, the first thing which happens is futures premiums compress. The futures market doesn't get it right more than 70% of the times, but Every time the markets take a U-turn, or a stock or a commodity like this takes a U-turn, you will see the futures premiums compressing. See, yesterday the futures quoted at 1,16,100. This is what the client bought, the 30 crore notional values, 26 lots, and the
Right.
spot price averaged at 15,100. That was
Right.
only 900 rupees more.
Right.
So ideally, nobody should own an ETF, because
Correct.
900 rupees is very little extra price to pay to own it till December without putting any capital.
That's
So,
right.
what coming back to your point, I think you if you are in gold, and if you're a short-term trader in gold, not watching the futures premium may be criminal. So just keep an eye on that. Sometimes it gets into negative discounts, then you really know that you're in the fag end of the momentum rally.
All right, that's valid, sound advice coming to all the futures, all the gold short-term investors not looking at the futures, perhaps look at the futures price. Well, Feroze Azeez, as always, pleasure having you here with us on News9, and congratulations once again on that fantastic listing of Anand Rathi on the markets.